Professional Insights, brought to you by the National Referral Network. And today we're diving into a topic that could be a game changer for homeowners nearing retirement, and that is reverse mortgages. And whether you've heard about them, have questions about them, curious about them, this interview is for you. And joining us today is Charlie Hamilton, an expert in reverse mortgages and someone who's helped countless people navigate how reverse mortgages work and help them get educated on this tool. And it is a tool. It's not for everyone, but it is a financial tool that is at your disposal. And we're going to go through all of those kind of cracks and nuances to this today. But before we do, hit that like and subscribe button. Make sure you share this with anybody who may be considering a reverse mortgage. Help them get educated. So with all that said, let's get into this. Morning, Charlie. How are you?
Yeah. Good morning, Mike. I'm good. Thank you.
I love it. It's been a while since you've been here. I know a lot has happened since we've talked. I think it's been a year. But let's start with the basics. Charlie, what is a reverse mortgage?
Reverse mortgage is just a loan, and you're able to take money out or access money or put aside money for the future and not have a payment on it.
So what is the difference between a reverse mortgage and a normal mortgage?
So on a traditional mortgage, you borrow so much and you get a payment schedule and you pay that down over time. On a reverse mortgage, you can borrow so much and you don't have to make a payment. Well, payments coming from somewhere, that loan balance increases over time.
Okay. So so a mortgage is you buy the home. A reverse mortgage is you pull the money out of the home.
Yes and no. So
Okay.
it's a very complex tool,
Okay.
and what's really nice about it is it allows you to access funds when you need them for any reason. Once you put it in place, and you don't have to necessarily borrow it, which is a great thing.
But you have to have value in the home, correct?
That's correct.
Okay. So who is typically eligible for a reverse mortgage?
So in California these days, we can do reverse mortgages for those that are 55 and up.
Okay. So somebody that is 30 that has, a bunch of equity in their home, that's not typical for them to do this.
Call me when you're older.
Okay. So then what are some of the criteria that homeowners must meet in order to apply for a reverse mortgage?
Sure thing. The number one is equity.
Okay.
So if you have a position of equity, really, we'd love to see somebody with 50% equity or greater, and that depends on age. The younger you are, the more equity you need. The older you are, the less equity you need.
So 50%, that's a lot of equity.
It is.
And so, I mean, I guess to your point, it might be difficult for somebody that's young. Although, look, house prices of home have gone up significantly. But to create 50%, that's quite a bit. Are there different types of reverse mortgages, right? Because normal mortgages, there's first-time home buyers, there's all kinds of different programs. Are there different programs for reverse mortgages too?
Yeah, we really see three different programs out there.
Okay.
One is the FHA. We call it the gold standard of reverse mortgage.
Okay.
So it's fantastic. It has all the buzzers and whistles. Second, maybe people call it a proprietary product or a jumbo reverse mortgage. This is a great loan for those that have, higher value homes, right, and need to get into more of their equity or a larger loan amount. Third, which is really filling in a lot of gaps, is a reverse mortgage second. And people are really surprised by that. But that allows people to get some of their equity and keep their first loan if they don't want to pay that off.
So you can get a second. That sounds, a reverse mortgage on a second. That sounds weird.
Yeah, it's a different. Let's say, so it works perfect for somebody that got, let's say home 700,000.
Okay.
They've got a $300,000 mortgage. They're comfortable making the payment, and mindset is a lot. A lot of people are really set on making that payment, but maybe they need 60, 70, $80,000 available to do some major home improvements. Roof, heating, and air. Just make the home what they need without tapping into other other assets, they can use that home, get the reverse mortgage second, not have a payment on that reverse mortgage second.
So Charlie, how is that different than getting like a HELOC?
Well, unlike a HELOC, it is good for life, right? So
Okay.
a HELOC, you can get that. Does require payments,
Mhm.
and after 10 years, you can no longer draw on it, and you have to begin paying that down.
Where a reverse mortgage is like you don't have to pay it back.
You do not have to make a payment on it. Correct.
So let's get into that. How is that repayment of that reverse mortgage work then?
So repayment of the reverse mortgage is going to happen when you're done with the home. So when
Meaning
you're
when
done
you
with the
when
home,
you when you pass away,
well, it could be, hey, we have people that move,
right?
right sizing, moving. Um, Maybe they have passed away and it's gone on to the heirs. At that time, you could sell the home and pay back the reverse mortgage. You could, the heirs could pay the home off and keep it, with a traditional loan or, cash on hand.
Okay. So some way, somehow, that note does need to be repaid.
It does.
Okay. I mean, it's not, be very clear, it's not free money.
Oh, absolutely not.
Okay.
I wish all lenders were in and out of the goodness of their heart, but plain fact of the matter is their goal is to make money and to make money on interest.
Okay. And so there's been a lot of negative press when it comes to reverse mortgages. I mean, I've never paid attention to it, but as I get older, I see more and more of it. And one of the concerns is obviously losing their home. And you kind of touched on it a little bit. How does homeownership work in this case and protections in place for that homeowner?
Yeah, so it does work like a traditional mortgage, excuse me, where a lien is placed on the house, it's recorded, and that's really it. Other than that, the house is yours, remains yours, and as long as you meet your obligations, pay your taxes, pay your insurance, maintain the home, all things people are already doing,
Right.
then you get to remain in that home regardless of what happens with the loan.
Now, I know that you're not an attorney, I'm not an attorney, but because we build digital family offices for individuals, part of that is an estate plan. How does a reverse mortgage affect homeowners' estate, inheritance, any part of that passing to the generation if they have a reverse mortgage?
So I get this question a lot, and as far as the estate plan is concerned, it's really the same, right?
Okay.
We're not writing anything different into that. What happens is, well, let's say, before the heirs were going to get this, wonderful inheritance of the home, and instead now they're going to get this great inheritance of the home. So in most cases, home passes to the heirs just the same as any other. All equity in the home is theirs.
Okay. Now minus the debt from the reverse
Correct.
mortgage, all right? Okay.
Exactly.
So kind of walk us through the numbers here, Charlie. You mentioned, let's just say somebody has a $300,000 note on their home. It's worth 700. And let's just say for argument's sake, they've used 200 of that 400,000 in equity. Okay. So then what happens to that 200,000 that they've borrowed as a reverse mortgage?
Yeah, so that's just going to add to the loan balance and be part of the loan payoff when the home sells.
Okay. And then if the heirs decide to buy the home or refinance the home, then they would refinance the home for the whole thing or just the portion of the previous note and the reverse mortgage note. How does that work?
Well, the previous note, the reverse mortgage note, are usually combined into one. In most instances, the
Okay.
first two reverse mortgages I mentioned, those are those loans are in first position. So when the reverse mortgage is put in place, the original note or whatever loan is on the property is paid off.
Oh, so okay, perfect.
Right.
So there isn't,
So
there's not two notes on the home. It's one note and it becomes a reverse mortgage.
correct. It's kind of a trick question. So funny thing about a reverse mortgage, there's actually two notes recorded.
Okay.
They're identical notes. One of them is recorded for FHA, The other one is recorded for basically for the homeowner or for the lender, right? And reason being is, let's say that lender A here, they fall by the wayside, go out of business. Well, we've guaranteed all these things for the reverse mortgage over here. Well, who's going to step in and do that? Well, great news. FHA is already sitting on a copy of the note. They already know everything about the loan. They need support. FHA steps in and services that loan.
Okay.
Yeah, it's kind of like so no, you don't owe twice,
Okay.
but
Well,
it's protection put in place so that nobody loses out, and we keep those people in their home.
so what other costs should homeowners be aware of? Fees, interest, insurance requirements. You mentioned some of those right there, but like what should homeowners be aware of?
Sure. You know what? Honestly, on an FHA loan, the biggest cost is a mortgage insurance premium. That
Okay.
mortgage insurance premium can be up to 2% or 2% of the home's value, up to, good Lord, up to $1 million plus. So that's a healthy thing to get over for some folks. But we're also allowing them to do something that they can't do with any other tool.
Well, but mortgage insurance is still part of a normal mortgage, is it not?
Um, Not necessarily, right?
Okay.
Traditional mortgage, if you're borrowing 80% or less than the home's value, then generally no mortgage insurance premium,
Okay.
right? If you're borrowing
Yeah.
over that, then you're going to pay a monthly mortgage insurance premium. Just that, okay, if in case the home gets upside down or it gets closer to it and there's a foreclosure, that mortgage insurance premium is going to pick up that difference.
Okay. Understood. I didn't know that. See, you learn something new. Every time I do these, I learn something new.
That's good.
So let's kind of walk through some scenarios, Charlie. Is that what we talk about clients about is that every financial instrument is a tool and nothing more than a tool, right? There are dozens of different types of screwdrivers, hammers, sledgehammers, whatever the case is. You don't use the same tool for every job. And so, in what scenario do you see people using reverse mortgages, and when does it make sense for a homeowner?
Yeah. So, I may be a little biased, but I see it as a great tool for anybody that's going into retirement. So, especially once you stop working, well, do you want to dedicate this much of your assets to paying off your home? Is that still your life goal, right?
Right.
Well, if you have only 600,000 in assets under management, and you have a $300,000 loan, and it's at today's rates at 6+%, or maybe it's even at 5%, you're looking at taking not $300,000 of your assets to pay off a $300,000 loan. You're talking about taking $450,000 of your assets to pay off that home over time. Well, what the reverse mortgage does is, guess what? No payment required anymore here. Your assets here remain in place, have the opportunity to grow, and put you in a better position for a more successful retirement.
And one of the things that we spoke about in the last interview that we did was this idea of sequence of returns risk.
Mhm.
Can you go into a little bit about that and how the market does one thing and then reverse mortgage can help kind of
Sure thing.
smooth that out?
Yeah. So what can be really exciting is if you have more equity in the home, you can put a reverse mortgage in place, and it'll create this nest egg for you that you don't have to use, right? Well, guess what? Maybe now you have a $100,000, $200,000 nest egg, or even a $500,000 nest egg in your reverse mortgage that's just sitting there waiting for you when you need it. Well, when is a great time to draw on that? We get a down market. The last thing you want to do is sell two stocks for the price of one, right?
Right.
That would stink. Let's leave those two stocks in. Instead of doing that, let's draw those funds that we need from the reverse mortgage. Well, now your stocks have, or your portfolio has time to recuperate, and you've taken an asset that's not increasing in value and use that instead.
And I think this is where, despite the negative press that reverse mortgages have in the industry, this could be an extremely powerful tool for somebody nearing retirement that may be concerned about the market. And this isn't political. It's just we have market downturns. And the worst case scenario, to your point, Charlie, is that you go into retirement on a market downturn and now you're pulling money out, which means your portfolio is, I'm not going to say free falling, but it's certainly declining at a more rapid rate than anticipated. Right. And
Yeah.
then, so the reverse, so you could literally, so correct me if I'm wrong, Charlie. So let's just say the market takes a downturn and you use reverse mortgage this year and say 2025. And so in 2026, if the market changes, can you turn this kind of pumps on and off?
No, absolutely. So
Wow.
reverse mortgage, you could draw in a few different ways. They do have it where, oh, I need just monthly income,
Okay.
right? Maybe somebody just doesn't make it each month on their retirement. Well, great. Turn on the reverse mortgage, get however much you need each month out of that reverse mortgage, to a point. It does have limits. The other is, well, whenever you need it, you can say, you know what? I need to draw money from the reverse mortgage. You can do it yourself, self-regulate on a monthly basis. You could do it. Maybe you only need it when, big ticket items come along, maybe property tax, maybe homeowners insurance. Just do it for those things.
Interesting. So when considering a reverse mortgage, like obviously there's professionals like yourself, what kind of financial counseling or advice would you recommend before moving forward with this process?
Yeah. So, I mean, first thing, get a trusted advisor, right?
Right.
So whether it's you, whether it's, or your CPA, a lot of people have different trusted advisors. So get into that trusted advisor, let them know what you need. But at the same time, if that trusted advisor turns to you and says, never do a reverse mortgage, that trusted advisor isn't educated on that product or that tool, right? So you want somebody that is educated on the tool, and you would like a reverse mortgage professional to talk to that's not there to just say, oh, do it, do it, do it, do it, do it, right?
Right.
You want a reverse mortgage professional that's going to say, this is what it's going to do for you, and these are the effects of it.
So a lot of professionals, Charlie, and we talk about this all the time on these interviews. A lot of professionals don't like working with other professionals because of that competition standpoint.
Yeah.
And so what are some of the misconceptions that you frequently encounter when clients come to you, and how do you help them overcome those concerns?
Sure thing. What's amazing is after I go through and we educate somebody, usually they're saying, this has got to be too good to be true, right? And I'm like,
Yeah.
well, we talked about the interest. We talked about, the lender is in there for the interest. Those items are there. And I'm sorry, I'm losing my train of thought a little bit on that. So as far as other trusted advisors,
Yeah.
I welcome them. Like the first thing that I would love to do is make sure that, Mike, you've never had a client use a reverse mortgage. You come into me and you sit with me with your clients and we go through it. Guess what? Now we have you educated to a point where you can help more clients have greater wealth.
Right. And I think it's another thing we talk about this is that anybody watching this, you need a team of professionals, right? It doesn't
Absolutely.
mean that you're going to use that tool, but you need a team of professionals and you need trusted advisors like Charlie was saying, because at some point in time, you may need it or somebody may need it that you love, family member, aunt, uncle, whatever the case may be. And you need to have the knowledge at least to be like, oh, I have a resource for that. And so, Charlie, there's a lot of things that are changing, right? There's a lot of things that have changed since you and I last spoke. Fed rate is now coming down. What are some of the recent changes or trends within the reverse mortgage industry that homeowners need to be aware of?
So exciting for us is rates coming down.
Yep.
The lower the rates are, the more the more funds we make available.
Okay.
It's pretty simple. If you have a high rate and you borrow this much, it's going to grow quickly and approach your home's value, right?
Right.
If you have a low rate and you borrow this much, it's going to grow much slower, right? So it's fantastic for us. We're seeing people have opportunities now that haven't had them for the last few years or last couple of years with the high rate market. So that's very exciting for us. It's generating a lot of buzz.
And then with people with the supply shortage of homes and interest rates coming down and people kind of flooding the market, obviously home values may creep up a little bit, right? Is that a benefit to the homeowner?
Well, having more equity in your home, I think is always a benefit,
Right.
right? The more value in your home, better off you are. So on the reverse mortgage side, well, it means that we get to increase your benefit because we're going to make a portion of the home's value available. Could be anywhere from 35% all the way up to 75% of the home's value, depending on
Wow.
your age. On something like that.
Interesting. So, I mean, look, we're going into a very interesting time. And wow, that could be, I mean, with interest rates dropping, especially, which we don't know if they're going to drop it again this year or not, but their projections are definitely 2025. And then with home values, I mean, this could be a huge benefit to a lot of individuals going into retirement.
Absolutely. It's just, I don't know any plan that hasn't benefited from more funds available. I
Yeah.
mean,
And you don't
so
have to use them.
exactly. So if you have the experts have done the math, right? They're better than me, right? So
Yeah.
they've done the math over and over, and it's been proven in just about every situation that if you have $1 million in assets under management and you have a home that is free and clear, if you put a reverse mortgage in place and use the reverse mortgage strategically, you will leave a bigger legacy to your children or to your heirs than you would otherwise. And we're talking not a little bit, we're talking maybe leaving, between the house and assets under management, leaving 700,000 to your children compared to leaving 1.8 million to your children.
Oh, see, now the wheels are turning.
That is substantial, right?
Yeah.
That's part of my retirement plan.
Because
Absolutely.
you've got required minimum distributions, but if you do a Roth conversion, I mean, there's all kinds of things that you could prevent the erosion of that legacy by utilizing these different tools, which is a whole different conversation, which we'll
It,
get
it's
into.
it's such a giant one. The experts have spoken. It works.
Man. So, Charlie, I really appreciate the time. Lastly, look, if someone's interested in exploring reverse mortgages, what are some of the steps that they need to take and to ensure that they're working with a reputable lender?
Sure thing. Number one, reach out to the professionals that you already have, right?
Okay.
Um, if they don't have a reverse mortgage professional for you to talk to, then find them one, right? You're going to help them and everybody around them,
Right.
right? Definitely speak with a reverse mortgage professional. Um, I would say that most reverse mortgage professionals are there to help you, right? The loan isn't about them. If they start saying, this is what I would do, this is me, if this was my loan, no, just say, this is your loan and this is all about you. So we always want that you factor in there, or client factor, or the benefactor in there. And absolutely get all the advice you can from all those people in their network.
Well, I think you bring up a great point, Charlie, is that if any advisor, CPA, attorney, it doesn't, I mean, just fill in a profession, it doesn't matter.
Yeah,
If they're talking down to you and they're not educating you, they're not the right person.
exactly.
I mean, and that's why we do these interviews to help educate individuals just to start asking better questions. You don't have to be experts in any area. You just need to be able to ask better questions and to get better answers, right? It's far too
Absolutely.
many people that I talk to go to their CPA with something and their CPA says no, like you mentioned earlier, Charlie, and then it's not a good idea. Well,
Yeah.
that's not true,
Yeah.
right?
The CPA misnomer we hear all the time is you're going to lose your tax benefit. Okay. So, but by doing it, you're going to lose, $10,000 a year in write-off. So if you're in a high tax bracket, $2,500,
Hmm.
right? But by not doing it, you're going to lose $60,000 of your portfolio,
Yeah, well,
right? So which one do you want, right?
which is a bigger pain, right?
Exactly. So, and what's going to help you in the long run? You know what? I'm willing to sacrifice $2,500 that I would get out of writing that off.
But
So
this also goes to your point, Charlie, how important a team of professionals that works together so you can run the numbers. Look, you could run the numbers, Charlie, and if it doesn't make sense, don't do it.
yep, absolutely.
But
And it's
at least you have the knowledge to make an educated decision.
yeah, and it's not hard to do. Um, the financial software out there that people are plugging in all of your information into is so robust. It, in 5 seconds or 1 second, it thinks through 1,000 different scenarios
Yeah.
and gives you this predictability of success in retirement. Well, if your needle's here at 50% or 60 or 70%, it's still a little nerve wracking,
Right.
right? Wouldn't you just love to see that just get pegged over? Nothing's going to say 100% because
Right.
we never know what's going to happen. But we sure love to see that in the 90s.
It'd be amazing.
That would be incredible.
And to have a safety net beyond the safety net.
Yeah.
Right. So many things. We could go on this one, Charlie. But Charlie, as always, man, I thank you so much for being available, for doing this, for being part of the network and being a resource. And look, we haven't worked together yet, but I know there's a lot of people that'll be asking questions. So please, for people watching, leave the questions below. If you have anything that I can help with, let me know. I can get you in touch with Charlie. His information will be below. I know that I've got to put your NMLS number down there. So
yes, please.
I do have that.
Regulations are good.
Compliance is great. But Charlie, thank you so much for being here. I really appreciate the time.
Thank you, Mike. Happy to be with the network.
Awesome, buddy.